Hello and
Hello.
welcome. We're going to do a little bit of a debate between um, two individuals who are on basically both sides of the coin. Um, we're basically first. The first thing we're going to do is look at um, introductions. So, Dark Side, if you don't mind, can you tell us a little bit about yourself um, and you can feel free to set this up.
Sure. Thanks, Crypto Parlor. Thanks, Scott, for having me here tonight. So, a little bit about myself. I'm an old school TradFi guy. I started in 1989 on the floor of the Philadelphia Options Exchange, traded in San Francisco on the floor of the P Coast, moved to Chicago, traded on the floor of the CBOE, traded upstairs at the CBOE, ended up working at a hedge fund, and then kind of came back into the business as a broker on the floor of the exchange, offering agency services. That led me to develop my own uh, options execution platform. That company that I started and was the founding CEO is Dash Financial, extremely successful today. Um, I was at Dash from foundation to 2013. In October of 2013, I was on a flight to Spain to meet with some of our clients at Banco Santander. It was a midday flight, so I bought a bunch of magazines, and sure enough, in one of those magazines was the Bitcoin white paper. And I read that white paper about 8 times on that flight. I was so blown away that I landed on the ground in Spain. I downloaded an app called Local Bitcoin, and I ended up meeting a random Spaniard. I took 500 euro out of the bank because that's all they'd let me have, and I bought 500 euro worth of Bitcoin, and that began my journey. I quickly left Wall Street. I saw Bitcoin and distributed ledger technologies as just mind-blowing ways to secure data. So I founded a company by the name of Alter Software Solutions. We hold, I think, between 15 and 17 patents in foundational patents in cybersecurity and distributed ledger technologies. I left Alter in 2019 and retired, and here I am today. So that's sort of my origin story.
It's pretty cool. Go ahead, Scott. Why don't you tell us a little bit about yourself and how you ended up where you ended up?
Okay. First of all, I said this to Dark Side before we got started. I think it is a great thing that he decided that he was going to be willing to do this with me. And I deeply appreciate our moderator for being here as well. And we've got a couple of people in the background that are helping out with comments on YouTube. And I just want to thank everybody for doing this. I found crypto in 2014, and I was captivated by it. And I am not. I'm very open about my recovery. I'm a recovering alcoholic, and one of the qualities that I have with my alcoholism is I'm still an extremely obsessive person. So when I get stuck on something, I just go and go and go. And I was captivated with crypto and blockchain and all of that stuff. Don Tapscott was one of the first videos that I ever watched, and it just captured my imagination. I got into crypto in 2017 with my first purchase in Bitcoin, and then Ethereum was the second one. And then 2.5 years ago, when I kind of figured out that Bitcoin lost a little bit of utility that it really had when it failed as a payment option because the tech doesn't scale. And so with no utility, the only thing left is it's a Ponzi scheme. And so I sold Bitcoin at that time for that reason. And then Ethereum, I hope for enough people, it's obvious, ETHgate. I knew all about that. And I was involved in XRP, was the third crypto that I bought. And my biggest reason for being here, I want to share one picture, and then I'll turn it back over to John. I'm a big Simon Sinek fan. I don't know how many of y'all have ever heard of Simon. He his most famous book is called Start with Why. So why did I want to debate dark side? Because I believe in every fiber of my being that Bitcoin is a Ponzi scheme. Oh yeah, one other thing. Back in my past, I spent 10 years evaluating Ponzi schemes and legit business structures. So that gives me the opportunity to be an outlier, according to Malcolm Gladwell. And so I believe that it's more important to listen to an opinion from a person's experience than the opinion of a person without experience. So Ponzi's are going to, three things are going to happen. And I believe this is what's going to happen with Bitcoin. They always collapse. The majority of participants get hurt. Most of the people are going to lose their money. And then three is the timing is the only factor that determines the winners and losers. So money can absolutely be made. When I first saw Bitcoin, what is $100? If I'd have bought 5 or 10 of them then, yeah, I'd have made a whole lot of money. But what's the end game? What's going to end up happening? Okay, so that's it, John. That's my intro.
Okay, thanks. And I guess we can just lower that. Let's hide that off. Good. Dark side, can you tell me a little bit about the Ponzi schemes that you might have even experienced on Wall Street?
Yeah, more than one.
Yeah. So can you give me a little more highlight on that, and maybe I'm just wondering, if that is a case with if we go ahead and define what Ponzi actually is, could it be applied to blockchains
or Bitcoin?
All right, so let's just first back up a little bit and talk about what was Ponzi, who Charles Ponzi, and a little bit of the history of Ponzi schemes. So, little history on Ponzi. He was a schemer and a scammer. I think it goes back to 1919. He developed this concept of a Ponzi scheme as a high returns with little or no risk. He solicited investments, paid earlier investors with the money from newer investors, and they expand rapidly. But there's a couple things that Scott left out that I think are really important to understand about Ponzi schemes, right? Generally, they have high returns with little or no risk. They're overly consistent returns. They're unregistered investments. They have unlicensed sellers, secretive or complex strategies. They generally have problems with paperwork, difficulty receiving any type of payments. They're hard to get out of once you're in them, and a heavy emphasis on recruitment. But most importantly, there's 4 factors that I think really make up a Ponzi scheme. And those are the 4 factors which show that they require deception. And a Ponzi scheme requires deception by definition, right? So there's those 4 factors for me are false promises of high returns with little or no risk, misrepresentations of how the money is being invested, concealment of the true nature of the operation, and continuous recruitment of new investors to pay earlier ones, right? And I think if you go down that list, right, I think, what Scott put in is true, but they didn't include the important part, which is that a Ponzi requires deception. And just from my origin story, right, I got on an airplane, I read the white paper, which was a technological presentation of the Bitcoin technology, of the blockchain. And from there, nobody had to pitch me, right? I was not solicited by anybody. I wasn't promised any returns. Nothing was guaranteed me, right? I actually, of my own volition, went out and purchased Bitcoin from another individual. That individual didn't seek me out, right? I seeked him out, and I clicked on his name on local Bitcoins, and I met the gentleman, and we had a fair exchange of cash for Bitcoin. So I think by all definitions, Bitcoin, right? And we can go into a lot of the technical features of why it's a protocol, why it's, I don't even consider Bitcoin a technology. I consider it a protocol. And the only real blockchain, right, is Bitcoin. And we can go into why I think that. But ultimately, Bitcoin doesn't hold any of these characteristics. There's nothing deceptive about Bitcoin. As Scott mentioned, like in a traditional Ponzi scheme, if you look at Bernie Madoff, it was very hard to get your money out. I mean, extremely difficult. Look, Bitcoin is the most liquid asset on the planet Earth, 24/7, 365. You can get in and you can get out. So look, on so many different metrics, I think it's crazy to call Bitcoin a Ponzi scheme. But I'm happy to entertain the debate and get into sort of the deeper concepts of proof of work. And, and I'd like to address Scott's concept that Bitcoin fails as a medium of exchange. I don't think that's the case, right? I think, the mempool is empty today. You can transact in Bitcoin, and around the globe, they are transacting in Bitcoin. If you go to the global south, they're using layer 2 technologies, Lightning. There's a lot of different kind of methodologies that you need to understand to really understand Bitcoin. This is not a 10-hour project for anybody, right? We say that if you put 100 hours into Bitcoin, then we're ready to kind of take the next step. But everybody's got to put in the work. And if you don't put in the work, then you can fall kind of victim to that concept that Bitcoin is a Ponzi.
So, Scott, what do you have to say about that?
Okay, so thank you for that, Dark Side. All right, the very first thing is, again, I've had 10 years worth of experience listening to people. And what happened, just so y'all know, I got into multi-level marketing at the ripe age of 24 years old. I grew up in the mountains of North Carolina. I didn't even know where Egypt was, that pyramids were there. I mean, I was so green, it was ridiculous. But I did bring one thing to the table. I was teachable. I did everything that my upline told me to do without any question. It was monkey see, monkey do. And I became very successful very rapidly. And 40 years ago, if you've never sold anything before, and in the first 62 days, you sell $162 worth of water filters, $162,000, and your net for the first 62 days is $62,000. And some of the people in the audience know what Rule 62 is. A little coincidences there. So when you become successful in that industry, what all the other people that are looking for an opportunity to do is they try to come and recruit you to go into their business. And so I got a crash course in having to learn how to evaluate other people's business opportunities, because I was able to do that. And most of the time I got them to join the company that I was in and be in my downline, and none of them ever got me. So to understand what a Ponzi is, you have to have an accurate definition that fits all Ponzis. And there are 4 of them. All right. Number 1, investor deposits. Oh, another thing and I think it's really important. All right. If I go and I'm trying to define a bank account, a bank robbery, and I go back to 1930, how did a bank robbery happen then? A guy or a gal walked into a bank, had a mask on, had a gun, went up to the teller, put the gun in their face and said, "Give me the money." And then they walked out of the bank and they got in a getaway car and they drove off. For me to try to evaluate what I call a next generation Ponzi by using the 1930 criteria, I'm leaving out the fact that the Ponzis have evolved. Everything in this universe evolves. And the Bitcoin Ponzi is a next generation Ponzi. So the parts don't do exactly or look exactly like the Ponzis that preceded it, but the core function is exactly the same. And these are those 4 elements. Number 1, they take in money. All right, you can call it a deposit, you can call it a investment, whatever, but money's going in it. That Bitcoin Ponzi checks that box. Number two, they have little or no legitimate business operations. Well, that's easy. It's not a business. It's just a software that collects people's money, new money. All right. Then number three, little or no business profits or earnings. There is no business to have any profit off of. All it's doing is collecting new money from the next greater fool that buys into it. And then number four, the source of those returns to investors inflate the value of the people that were already in it. And I'll give you an example. There's a lady named Jane. Jane buys $1,000 worth of Bitcoin today. All right. So Sailing Sailor tomorrow buys $2 billion worth of Bitcoin to keep the Ponzi going, because he's dumb, but he's not stupid. He knows what's going to happen when the new money stops going into the Ponzi. It's going to begin to collapse. So he puts in $2 billion. And one thing that I would ask everyone to think about, why is he so desperate to keep adding new money into this thing? Think about that. So anyway, the next day, Jane wakes up and her Bitcoin has gone from 84,000 with the value when she bought her $1,000 worth. Then the new money flowed into the Ponzi, Sailor's $2 billion, and presto changeo, Jane's value of her Bitcoin, it's up 86,000 now. Based on what? New money coming in. No acquisition that they made, nothing. No new product that they developed, nothing. Nothing but new money coming in. And if you look at these four core functions of what a Ponzi scheme is, the Bitcoin Ponzi fits them all like a glove. And this is a little diagram that I made to show the components. You've got the new money coming in, then the exchanges in this new generation Ponzi. The on and off ramps are the way that the money is exchanged. And then the Bitcoin marketing machine are the promoters. And for anyone doubting that there are promoters, see, in a Ponzi scheme, people that don't understand it are going to say, well, there's no promoter. Well, there's influencers. And the greatest of them all, the biggest lunatic of them all, is this guy. So when a new person is looking and seeing this from the guy who says, sell a kidney and buy into Bitcoin, and it's at 95,000 today, maybe, and they see Bitcoin is going to $10 million, this is your promoter. He is the one who is influencing people to put their money into it, because he's leaving each one of them with the anticipation of a great gain. Now, is it a specific 50% or a specific 100%? No, it is from 95,000 and it's going to go to 10 million. In human psychology, that is as much of a psychological mover as if I put it down in a specific percentage. And then one last thing, and then I'll turn it back over. All right. One of the things is people are relying on Grok, right? People have an idea and they have confirmation bias. They want to believe what they believe, and the only information that they're going to accept is information that backs up what they think. So right now, Grok, if I go to Grok and say, is Bitcoin a Ponzi scheme? It's going to say no, okay. But if you write the question differently and talk about how the Ponzi functions, then you get a completely different answer, just like I did. Because again, the only function, take all the bells and whistles off, take all the whatever else you want to say, the only function of the Bitcoin Ponzi is new money in, and that inflates the value of the people that were in it previously. So what happens when the new money stops? And see, we've had Tether help it, and we've had Sailor help it. And now the Bitcoin people have gone from the libertarian dream of screw the man, screw the government, F the banks. Now they're all grateful and they're all dependent on governments and banks getting involved, because if they don't get involved, then the retail money cannot continue to have the Ponzi grow. So now, instead of standing for what they originally believed in, they've turned into hypocrites, and now they want all the bank money and all the government to come in to keep the Ponzi going. So those are the slides that I had. And I just hope everyone understands, Grok is not as smart today, as intuitive, as logical as it will be in the future. The only thing that Grok can do today is information in, and then it spits that information back out. It doesn't have the ability to think logically and to come up with a different conclusion than just the information, the raw data that was sent into it. Will it get better? My estimation is yes, but it's not there yet, because I can ask how the Bitcoin Ponzi functions and get a completely different answer than if you just ask Grok, is Bitcoin a Ponzi? Well, if you ask it two different ways, then you can, at least the logical conclusion that I can come to is that Grok is not an effective way a trustworthy way to be able to get information, because
Sure.
It's only giving the information that was given to it. Okay, I'm done.
So, Darkside, do you have anything to add to that or to comment on that?
Yeah, I have a lot to comment on that. So by that definition, those four characteristics, right? Every money that's ever existed, including gold, including dollars, euros, every money that's ever existed is a Ponzi scheme, right? So I guess, if that's the definition we're going to use, well then, yeah, I mean, every money that's ever existed requires new money and new people to come in to inflate the value of the money, whether that money is debt-based or whether that's hard money. That's why I don't think that's a fair definition. But that being said, let's explain some of the questions that Scott had, or the points that Scott made. Why is all of this money coming into Bitcoin? Well, you have to ask yourself, what is money, right? Money, there's something called Gresham's Law. And Gresham's Law says that money, right, or wealth will always find will always move to the most valuable money, or the hardest money that exists, right? The absolute best store of value, right? Now, why is everything moving to Bitcoin? Why are all of these fiat dollars, right, coming into the Bitcoin space? Well, it's because Bitcoin is the hardest money that exists. It's harder than gold, right? Look at gold. Gold has failed as a monetary asset. It failed in 1933. It failed in 1971. It's not auditable. It's not verifiable. It's counterfeitable. On almost every layer, it's not transportable, right? On almost every layer, gold is a failed monetary asset. I guess you want to call gold a Ponzi scheme? I guess you can, right?
Well, I think there's utility in gold, right? I mean,
what's the utility? If
gold trade,
if the utility is jewelry, then yeah, I mean, gold is trading probably, a billion
there's a reason why they're trading gold. There is a utility to gold.
Right. Well, there's more. My argument would be that the real utility is in Bitcoin.
So right? what is the utility of Bitcoin?
Yeah. So let me explain what Bitcoin really is, right? Bitcoin is the most secure proof of work supercomputer that's ever existed. Okay. It takes up over 10 gigawatts of electricity to power this supercomputer. And this supercomputer, through proof of work and through the difficulty adjustment, produces a block every 10 minutes, right? And it's unbelievable how consistent, since its Genesis block, Bitcoin is at producing a block every 10 minutes. Every 2 weeks, this difficulty adjustment is mathematically recalculated. And the purpose of you can think of the difficulty adjustment as the Federal Reserve of Bitcoin, right? It actually manages the Bitcoin network to produce a block every 10 minutes. Without the difficulty adjustment, the blocks would speed up as more and more people mined Bitcoin. Similar to gold, Bitcoin is mined, right? It's mined using an algorithm, a mathematical formula that helps solve a puzzle. And because of the veracity of the network, right? What makes Bitcoin so special and so secure is that you don't know who's going to mine the next block. All of this power and all of this distributed technology and distributed power coming into the network creates a perfect decentralized network that is neutral. No one controls it. Not the Federal Reserve, not the Bank of England, not the ECB, not the Bank of Japan. Nobody has control over the Bitcoin network. So ask yourself today, why is Russia, who has been sanctioned by the US, why are they selling their oil for Bitcoin? Right? Because it's the best neutral asset. Nobody can sanction them.
Where can
right?
somebody find something like that Russia is buying Bitcoin for oil?
They've come out openly and said so.
But where can you find that on the internet? Like, where can you prove that?
Just Google Putin buying oil with Bitcoin and transacting in Bitcoin. There's plenty of stories out there. He's actually said it. So
can you actually see it on the blockchain? Can you see it?
Well, the blockchain is public. So it's a good question. So the blockchain is public. It's verifiable. It's auditable. Anybody can run a node.
Sure.
Okay.
But is that provable? Even though there's a story out there that's saying it, is it actually provable? Can you actually do the stories go back to the actual blockchain? Show the addresses of the Russian addresses buying oil?
No, he's never. I don't believe he's ever given his addresses. But I'll take him at his word, saying as that he doesn't have access to the SWIFT system, right? And it really doesn't make sense for him to send shiploads of gold back and forth.
Right.
Remember, he can transact in Bitcoin, have final settlement in 10 or 20 minutes, right? And that's a model of perfect money, right? Like nobody controls it.
So that's pretty interesting that you just said that, because the internet traditionally is filled with disruption. Like if we go back in the history of the internet, we see how Yahoo, which was a slightly slower search engine, got majorly disrupted by Google. If you were to search for iguanas on Yahoo, for example, it would take about 10, 12 seconds. And when Google came around, Google said, hey, found those in 0.2. Right.
And, that's a great point, Crypto. Like you're making the point for me that Bitcoin is not a technology. It's a protocol.
The question I have though is
right. Similar. Now you brought up the internet, so let's talk about that.
Yeah.
Right. While companies are coming and going in the internet space, bigger, faster, stronger. Right. TCP/IP, which is the protocol of the internet, has been there since the start. Right. And you got to ask yourself, well, why is that the case? I'm sure someone's invented something smarter than TCP/IP, but that first mover advantage, once you have so many people and you hit critical mass, right, you're a protocol. And that's where Bitcoin is, right? You don't need bigger, faster, stronger Bitcoin. There's no need for it. It's perfect just the way it is. That's why we had the big block wars. If you make it faster, you give up something else, which is a layer of security, right? The reality is that when you own Bitcoin on the Bitcoin network, it is the most secure thing you could ever imagine, right? No one's been able to hack it to date. And it gets more secure. That by definition, the way the network is constructed, every single block, the network gets more secure. So today we're left with this absolutely impenetrable network. And another kind of fallacy is, remember, your coins exist as an entry on the network, right? And you have their location. So your Bitcoin secured by this proof of work network is impenetrable and has been impenetrable since the day it was formed.
Okay,
go ahead.
So I'd like to take a shot at that answer. Okay. All right. Gold. And this is a very common thing from people that I hear that don't really understand the core functions of what a Ponzi scheme is. They go off in all different kinds of directions and divert from the 4 functions of a Ponzi scheme, right? Anything that you just said, dark side, has nothing to do. It doesn't change these 4 elements of what a Ponzi is. It's just attributes of what you believe about Bitcoin, which is fine. Let me address gold. All right. And let me address why other legitimate businesses are not Ponzi schemes. There are people who buy gold to use it to make gold teeth. Not that many, but they buy it for that. There are people that buy it for jewelry. There are people who use it in electronics because it conducts electricity very well, meaning it has a real live use case in the real world utility other than price speculation. So if every single one of the people who were buying gold as a store of value stopped, they're speculators. If they all stopped investing in gold tomorrow as a speculative asset, you would still have a market for gold. In the Bitcoin Ponzi, this doesn't happen. The only reason that people are buying Bitcoin is number go up. It is all a speculative asset. Now, you can talk about Mathers. I call him Mathers because I like to make funny names for people, and he reminds me of the beaver. The Lightning Network is not being used very much. So you can say that it's there, but if you were in court trying to defend this against being a Ponzi scheme, the judge is going to look at what is the percentage of use with the utility that you say is there, as opposed to the number of people who are buying it for number go up. It's like running a house of ill repute. And you've got the madam talking to the judge, and he says, it looks like that you're running a whorehouse. And she goes, no, Your Honor, we got a snack bar. Yeah, because the percentage of what is going on in the overall picture matters. If they only had the snack bar to make it look like they're doing something besides selling sex, the judge that's not going to fly. And another thing, multiple income streams. This is real important, Dark Side. Non-Ponzi's have multiple income streams. I know Ripple very well because I like it, and that's the biggest bag I've got. They just made an acquisition of $1.25 billion to bring on Hidden Road, which has $3 trillion a year worth of transactions. That's expanding their business through acquisitions. What is the last acquisition that the Bitcoin network made?
That's a great question. So first, let's go to your first analogy about the whorehouse, right? So what percentage of the value of gold, right, is for jewelry or teeth, right? I would argue that gold would be trading below the value of silver, right? Gold's currently at $3,350, somewhere in that area, $3,300 an ounce. It would be trading at, let's say, $15 an ounce. So if I went to the judge and I said, Judge, no, we use gold as gold for teeth and for jewelry, he would probably say, no, you're running a whorehouse. So that's one. Number two is that, look, let's talk about the U.S. dollar. Can you put those four pieces up on the screen again? Thank you.
Absolutely.
Let's talk about the U.S. dollar.
You're welcome.
So the U.S. dollar, investor deposits, has little or no legitimate business operations. Matter of fact, it's running a $2 trillion deficit. Little or
probably
no business
more.
profits. Yeah, probably more. But yeah, so does it have business profits? Absolutely not. And the only thing that keeps the U.S. dollar going is our ability to print more U.S. dollars. So the source of the only return to investors is cash from new debt, right? So that's what a debt-based fiat Ponzi scheme looks like, right? So we're in agreement. We're both in agreement. Yeah, you can take that down. Thank you. We're both in agreement. Thanks. We're both in agreement.
Dark Side, can I address that real quickly?
Sure.
Okay. The point is with products and services, or I don't know, assets that have utility, it's not all 100% speculation. And yes, it may go down to just the people that use it for gold, for electronics and for jewelry, but that's there. It's that
Yes.
there is a
No,
floor of the price. So
I
you said
understand.
what you said it would go down to $30 or something
No, I
if
think
it was
probably
just
15. Probably
okay, 15.
15 from
Okay,
3,300.
agreed. But
You
see,
might
that's
call that a floor, but unfortunately, if it really happened, right, the entire global economy would be wiped out because
I,
of a derivatives
okay, but
unwind.
again, but what I'm
Let's
talking
go to
about.
look. I think
Well,
everybody
hold
knows gold is a Ponzi scheme. Can we talk about the dollar? What do you think?
on.
Is the dollar
Okay,
a Ponzi
Yeah,
I
scheme?
was
I would
gonna
agree. I
I
would
was
agree
gonna
with that too.
I
Yeah.
was gonna address that next. Okay.
Hold on 1 second, Scott. One second. Is XRP a Ponzi?
No, it has multiple income streams, but let me address the point that John made. I mean, that Dark Side made. If part of your argument is that the dollar is a Ponzi scheme, so that makes it okay that Bitcoin is, I'm not sure you're going to do very well with that argument.
No, absolutely not. My argument for Bitcoin is that it's the most perfect money that's ever existed, right? You can transact in it. You're absolutely wrong about nobody's using it, right? It's used at a very high level. We have people that come on my spaces from Nigeria that share with us, they're using Bitcoin every day. They're using the Lightning Network. They're using federations, which are layer 2 technologies. People are transacting in Bitcoin every single day. Billions and billions and billions of dollars are going through the Bitcoin network every single day. So
But
to think that people aren't
if that's true, why did the narrative change from a peer-to-peer payment network to a store of value? Because it wasn't being used. It wasn't not being used
that's not
enough.
why. No, that's not why. The why we go back to Gresham's law. Right, Gresham's law has been around for a long time. Right, Gresham's law says that money will find the hardest money that exists, and that will become the store of value. Look, no one's walking around and transacting in gold either, right? Like if I'm sitting here right now, and on one hand I have one Bitcoin, and on the other hand I have $84,000, which one? We know my $84,000 is being debased rapidly, right? Every single year, probably monthly, it's losing percentage points. Okay, why would I spend my Bitcoin when I could spend my worthless dollars? Right? What makes $100 worth 10 times more than a $10 bill? If I have a $100 bill and a $10 bill, they're arguably the paper that they're printed on is worth the exact same. So what makes the $100 bill worth 10 times more than the $10 bill? I'll tell you, it's called faith, right? It's a religion. Well, the US dollar is the largest religion that's ever existed. So look, if I could spend one or the other, I'm going to save in Bitcoin and I'm going to spend fiat, right? That's why you're seeing a shift to store of value, right? Because there's no good reason for somebody in the West who has access to fiat to spend Bitcoin. Now, if you're in the global South, if you're in Africa, right? If you're in Indonesia, where your currency is worthless, right? Then you're going to transact in Bitcoin because you want Bitcoin, right? You want to gain it, right? And that's what Gresham's law says. It teaches us. So we know that the hardest money that exists on the planet, which is Bitcoin, the proof of work network, the most secure way to store value known to mankind in the history of the world, right, will become a store of value until you're forced to use it as a medium of exchange. Right? Like no one's forcing me to spend my Bitcoin. I'd rather spend my fiat and buy more Bitcoin, right? If I'm going to mine fiat, meaning with my job, if I'm working, I want to buy Bitcoin. I want to put my money where it's going to have the best compounded annual growth rate. And that's in Bitcoin because Bitcoin is the hardest money that's ever been created, ever known to mankind.
Okay. And I appreciate your sermon there, but my point, Dark Side, is if you look at the four elements of a Ponzi, none of them have anything to do with is it hard money that you really believe in, or is it fiat that you think is a Ponzi as well?
Yeah, but by that definition, every monetary unit that's ever been created is a Ponzi scheme. So what should we do? Should we go back to barter, Scott?
No, what I'm saying is that you have legitimate companies that don't operate that way. And one of them being, hold on 1 second. Hold on. I'm trying to get the picture going. one of the things that I'm saying is I'm trying to say that Bitcoin is a Ponzi because the only function that it has is new money coming in, and that inflates the value of the people who are already in it. Now, take that as opposed to Ripple. And again, I'm just using that because I'm familiar with it. They just had an acquisition that is expanding their company's revenue because they have multiple revenue streams. They just created and came out with a new stable coin. That is going to increase not how you look at it as a religion, or if you look at it as hard money or soft or Ponzi fiat money. None of that applies how it functions. What you're sharing with me are your beliefs about the Bitcoin. And what I'm trying to get this down to,
my knowledge of the Bitcoin network.
Okay, your
it's
knowledge and your belief. But what I'm trying to get to, Dark Side, is none of that has to do with the function. Now, you put all of that white noise that you're talking about aside, and the bare knuckles of it, the function of it is new money comes in and it inflates for whatever reason people do it. I say they're doing it because they think it's going to make money, not because they're going to go spend it.
Scott, because do you believe that Ripple is a blockchain?
It inflates the value. So what I'm saying is that the majority of the people that are going into Bitcoin today are doing it for the number go up. They think if they put money into Bitcoin today, as Michael Saylor is telling them it's going to $10 million, that's his role as the promoter in this next gen Ponzi.
Saylor's only been around since 2021. Before, remember, Saylor's on record saying, this is internet magic money and nobody should, it's going to zero. So look, the fact that Saylor comes by in 2021, well after Bitcoin kind of hits critical mass, right? Great. I mean, he's smart. He's found a way to convert fiat into Bitcoin and to do it using his currency with an inflated currency, right? Like he's selling stock at 2 times the value of Bitcoin, and he's buying Bitcoin with it, and he's creating what he calls Bitcoin per share, right? He's selling convertible bonds. He's selling preferred stock. All of these financial instruments are just proof, and I know you'll agree with me, that the fiat money system that we have today is broken, right?
Absolutely agree.
Yeah, the fact that Saylor's able to do what he's able to do is proof that we are stuck in a debt-based fiat Ponzi scheme called the US dollar. So we agree on that. The question is, what comes next, right? When the dollar, if the dollar collapses, right, and at some point it will, it's a Ponzi scheme by definition, it will collapse. What value is Ripple, right? Ripple is set up to replace Swift. Right? If the dollar collapses, good luck to your stable coins. Good luck to your Ripple network, right? At some point you have to understand you're going to need new hard money. And the best hard money that's ever been created is the Bitcoin proof of work network. And again, it's a network. The amount of energy that goes into securing that network, to keeping your money secure, your Bitcoin secure, is greater than the amount of power used by the U.S. Navy.
Right.
So a lot of people, if you ask people why is the U.S. dollar, why is the U.S. dollar so secure? And they'll say, well, we have a Navy. Well, okay, you have a Navy, but my point is Bitcoin has a bigger Navy, right? And it is the most secure, hardest money that's ever been created. And that's why you're seeing all of this wealth. And it's not just Saylor. You have people, billionaires from Grant Cardone to BlackRock, Larry Fink, and it's look, they get it. Larry Fink, just to put BlackRock into perspective, BlackRock I think is somewhere around $11 trillion, $10 trillion. I mean, yeah. They're the third largest country in the world, right? And they are piling into not just Bitcoin, but MicroStrategy. They're buying miners. They're getting into the Bitcoin network, the ecosystem. I call it the Bitcoin complex, right? So think about the amount of public companies that are putting Bitcoin on their balance sheet. And why? It's because it's a neutral reserve asset. And you could argue, well, gold's a neutral reserve asset. Correct, but gold fails against Bitcoin. It's not, again, it's not transportable, it's not verifiable, it's not auditable, right? It's counterfeitable. So at every level, you're going to look for a neutral reserve asset. The entire world, look at the trade wars that are going on right now, the tariff wars, right? If you're sitting in one of these countries that has been tariffed, do you want to buy US assets or do you want to buy Bitcoin? Well, you want to buy Bitcoin because nobody controls it. It's neutral. The US government can't control Bitcoin. The US government seized, what, $360 billion of Russian bonds. We defaulted on our debt to Russia because we didn't like the way they were behaving. Well, you can't default on Bitcoin. So look, if you can't default on Bitcoin, now you understand why it's the best, hardest money that's ever existed. This is why nation states, sovereigns, corporations, sovereign individuals are stacking the boat on Bitcoin. It's not because it's a number go up. It's because where in the world else do you put your wealth? Like, are you going to put all your wealth in Ripple? Really? Ripple controlled, a U.S. company controlled by, and look, I spent the day today preparing for this a little bit, and I don't want to bash Ripple, but I read some of the court documents, the SEC documents, emails.
And they lost. So it's a moot point.
No, they didn't lose. They dropped the case. Well, that goes to show that we live in a kleptocracy and a corruptocracy where wealthy people can buy their way out of trouble. I get
so
that.
If Ripple wins, it's because they had money.
Well, they got the case dropped because they bought influence. Yeah, look, Brad Garlinghouse was at the White House. Remember,
how did Ripple buy influence with the SEC?
Hold on, let me go back for a second.
They literally were at the White House with the Trump administration.
That was last month.
Look,
not during the time that they had the SEC on the.
It was before the SEC dropped the case. They were at the White House for the crypto dinner, and then magically the cases dropped with the new administration. So look, we know. They gave a lot of money to this administration. Look, we know what's wrong with America. We know that you can buy politicians. We know you can buy political influence. But again, this gets back to the beauty of Bitcoin. Bitcoin doesn't have a CEO. It doesn't have a marketing department. It doesn't have a centralized authority. It is truly a neutral reserve asset. You can't say that for Ripple. You can't say that for Cardano. You can't say that for Ethereum.
You can't say it for Ripple, but I think with XRP is not Ripple. Let's be real.
Hold on. Let me.
Which makes it even. I mean, XRP is even worse than Ripple, right? Like XRP really has no use case. But that's
let me take a shot at that. Hold on. Now, first of all, you, besides being an intelligent person, Dark Side, I believe that you have had in your past a good deal of financial success. Is that an understatement?
I think it's a fair statement.
It
I've been truly blessed, and I love this country, and I want to see it fixed.
Yes.
And when I get the microphone next, I'm actually going to give you solutions to some of our problems.
Okay, good. And I'm interested in hearing them from you. But let me go back for a second. You understand the concept of fiduciary responsibility, right?
Of course.
Okay, if you went to a financial advisor today and walked into his office, he was dressed in a robe and had a basket of fruit, and he looked you straight in the eye and said, "You need to sell a kidney to get into this investment that I'm pitching you." Would you buy that from that guy?
Well, I mean, if you're referring to Michael Saylor's joke about selling a kidney, first of all, I don't buy anything from Michael Saylor. Okay, that's not me.
Okay? But how many people do, Dark Side? How many people are influenced by that lunatic?
No, I think he was making a joke. Bitcoin was trading down around 74 grand, and he posted a joke. I mean, taking him literally. I'm not here to defend Saylor. Okay,
let me finish, and then you'll have a chance to address the three things that I wanted to say. All right. The other thing is Ripple wins, so you're defending Saylor when he says something crazy as just some kind of a joke. You're trying to explain it away.
You really
Ripple,
think he wanted people to sell kidneys?
yeah, I actually do.
You really think, you know, it's
and
illegal
I
to
think
sell a
that
kidney.
anyone that is listening to him has lost their mind. And then the other thing about the fiduciary responsibility is, what if that guy in the robe holding a basket of food looked at you and said, now, I can't tell you who created this company. That's not that is not a demonstration of fiduciary responsibility, putting your money into something that you don't know who it is. That isn't.
Well,
And people are
let
going
me
to
address that directly.
getting back to the core
that's
function.
that's one of the great myths about Bitcoin, is that we don't know who created it. The reality is that
No,
Bitcoin,
it's not.
and again,
It is for people who believe in it, but for the sane people, it isn't.
so look, I consider myself to be extremely adept investor, right? I have spent my life on Wall Street, and think about
And
it.
how many
Again,
other investments do you make that you?
Scott, let me finish, okay? I gave you my origin story. I read the white paper, right? I understood the math. I understood that it's open source math, right? You understand the concept, you know, understand open source software. It doesn't matter who created it. It doesn't matter who created it, right? It's open source. Anybody who wants to look at the Bitcoin code, anybody who wants to go deep and understand how Bitcoin works, the software is open source. You can download the code, you can go to the GitHub, you can go to Bitcoin Core, you can download it, and you can run a node. Unlike XRP, right, where you have to be a validator, an approved validator, anybody, any person, any sovereign individual, any corporation, any government can run a node.
Now,
you can
I believe that's
verify,
incorrect.
you can audit.
Hold on, take a breath. Okay, the other thing about the energy use, we've got a big old disruptor coming along that's going to require more energy than we've ever seen, and that's called AI. So are we going to mine Bitcoin, or are we going to run AI? I think it's a pretty simple choice.
Yeah, no, it's a great question. So let me answer that. Right, very few people understand Bitcoin mining, and since you've brought up the subject, I'll explain it to you. Bitcoin mining is very different than AI power use. AI power use is always on power, sort of like nuclear, or think of your gas generators, your power companies. In order to run an AI data center, you need always on power. Now, what's interesting is Bitcoin, Bitcoin mining works as a load balancer. And what I mean by that is Bitcoin miners don't need to be always on. If you look at the problems they had in Texas back, I think it was 2020, 2021, right? They had a big problem where they had blackouts and everything froze up. That's because they didn't have proper load balancing on their network. Okay, today, because of all the Bitcoin mining that's moved to Texas, since that date, they haven't had a problem, because Bitcoin miners serve to load balance any particular network, right? So if you think of a power grid where you have, peak demand, and then you have the majority of the time where you have low demand, Bitcoin mining serves to load balance that network and let it run at a steady 80% of productivity or 85% of productivity all the time. So if you understand Bitcoin mining, you understand that it's critical to any power network. Now, if you go to countries like Bhutan that have excess energy, Russia that has excess energy, they're mining Bitcoin with their excess energy. So rather than grounding out energy, right, they're using it to monetize energy. Okay, so you need to, before you make comments about, hey, look, Bitcoin mining versus AI, it's not a versus AI. AI is a completely different power demand than Bitcoin is.
So dark side, maybe it's not AI, but what about, I've got a good question from one of the users here. What about Bitcoin and quantum computing?
It's a great question, right? So look,
does Bitcoin have any chance against it?
Yeah, absolutely. And first of all, let's talk about quantum computing, where it is today. Anybody who wants to go ahead and Google or throw into ChatGPT or Grok, ask this question. Has a quantum computer ever cracked a simple password? And the answer is no. Okay, so the quantum computing story, and it's to this point, it's simply a story, is pretty far off in the distance. However, understand that Bitcoin uses SHA-256 algorithm. That's the same algorithm that was developed by the NSA, that's used by every major bank in this country, that's used by the military, that's used by every single cybersecurity company. So if SHA-256 were to be cracked tomorrow, right, Bitcoin would be the least of their problems, right? Like there would be no money left in a bank. There would be nuclear codes flying around the world. Whoever cracks SHA-256.
I mean, no doubt it's coming.
Now,
it's not here yet.
No, so it's not here. Now the answer is Bitcoin is best suited as a protocol to adapt to a post-quantum world.
How
right.
so?
So what you would see is there's two surface layers, two surface vectors of attack. One would be Bitcoin wallets, right? And you'd be forced to move your coins from a pre-quantum wallet to a post-quantum wallet. And the second is the mining infrastructure. The mining infrastructure would have to change. So new mining machines would be shipped with a new post-quantum algorithm. And that's true, by the way, this is not just true for Bitcoin, this is true for the entire world. The entire world would need to move to a post-quantum cryptography, right? And by the way, one of the problems with the quantum scare that we have today is that you don't know yet what you're trying to solve for. So you see like cryptos coming out, we are the post-quantum crypto. Well, that's cute and all, but you really don't yet know what quantum looks like because it's not here yet, right? So trying to solve for something that doesn't exist is sometimes an act in futility. You're better off to wait because there's low-hanging fruit and this is a big if quantum computers are truly able to break passwords, there's going to be a lot broken before they get to SHA-256. You're going to have plenty of warning, right? Like as every single email system is compromised and all these different kind of lower levels of cryptography.
Yeah, but they're probably going to cover currency faster than other.
Yeah, but again, SHA-256 is going to be the hardest one to get. Yeah. Like they're going to go after the low-hanging fruit, which is not SHA-256. They're going to go after.
So is there an answer on the XRP side for quantum computing?
Hold on. The reason we're here is to talk about if Bitcoin is a Ponzi scheme, and we're going off into the weeds a little bit. So I want to try to bring it back.
Okay, so we were just taking actually, Scott, we're just taking questions from the audience there.
Right, I got you. I understand. But what I want to try to do is focus on this again. Is it a Ponzi scheme or not? All of the minutia about what people think about it doesn't change the function. And the only function are these four things. That's it. And so other companies, right? And it's not a business. That's correct. It's a Ponzi scheme because the only thing that it's doing besides all of the minutia that people want to believe in and are going to tell people, the four functions are these four. It doesn't all of the mining and the this and that's hard that and blah, blah, blah does not change the core function. And Ripple is not a Ponzi scheme because it has multiple revenue streams. The Bitcoin Ponzi has one revenue stream, new money from the next greater fool buying in, who I say is 98% buying it because of the number go up. They're not buying it for the tech. And I've got one other thing to say, and then I'm wrapped. If y'all want to close or we can take questions. Here's the thing that I'd like to ask you, Darkside. Let's imagine that you could change the code. You can't, and people shockingly think that that's a good thing. It's not a good thing that in a universe of constant change that you can't adapt. That's a death nail. All right, so let me ask you three things.
By the way, that's not true, right? Yeah. We have BIPs. Bitcoin is constantly adapting. It takes consensus of the community,
Okay,
right? So that,
let me
but
finish this.
new code is constantly we went Taproot, we went SegWit, right? Those are all new and modern enhancements on the Bitcoin network. So I would agree with you. That would be a death knell, but that's not true of Bitcoin.
So let me ask you these. I want to know the question to this answer, and then again, we're coming up on an hour, so I don't want to keep anybody in the unless we've got lively questions from the audience. Here's what I'd like to know from you, Darkside. If Bitcoin were faster, so it could actually be used in transactions by the masses, because I can guarantee you the masses aren't using it as slow and as costly as the transactions are right now. They're just not. There would be more adoption of it if it was going to be used that way up to now, if it was going to be, but it's not. It's a store of value. So the second improvement, if it were possible, if the transaction costs were much lower. And then the third thing, if the supply and scarcity, I think you and I both agree 1,000%, scarcity is great, baby. I love me some scarcity. But is scarcity better if it is a set supply, or is it better if it is a deflationary supply? Would Bitcoin be better if it had those three attributes that were able to be improved upon what they have right now?
Okay, so first, Bitcoin does change. So you're incorrect on that. Number two, let's talk about speed. If Bitcoin was faster, it would be less secure. Okay, and you have to understand Ripple, which is extremely fast, Solana, which is extremely fast, they don't have a proof of work network, right? They have a proof of stake network, right? Where the people that hold the most Solana, the people that hold the most Ripple, right? They have the votes.
That's incorrect.
They also control.
Ripple is a consensus mechanism.
They also control the validators, right? Ripple Labs owns what, 140 million XRP. So look, I don't want to. Again, I could care less about XRP. I could care less about Solana. I'm here to explain the Bitcoin story.
Well, what I would encourage, I care if you've got the facts wrong, because there's 1,000 validators. There's 1,000 validators with Ripple.
Not on the website. On the Ripple Labs network, I went onto the website. There are 17. I think there were 17 approved validators. Now the problem
there's 125 validators and there's 1,000 nodes. So you don't have to.
Yeah, but how many are approved? But you see, you can't run a node, right? Like the average person can't run a node. If you come to Bitcoin, you can run a node. You can be a sovereign individual, and that's a big deal. Now, as far as so faster, no, we don't want Bitcoin any faster. The entire, like I mentioned earlier, the entire concept of a difficulty adjustment is to produce a block every 10 minutes, and that keeps the network extremely secure. It keeps it so that nobody on the planet Earth knows where the next block is coming from. That makes it impenetrable. Right now, that's not true in Ripple. That's not true in Solana. That's not true in these other coins, Ethereum. Right? Like those are just different. Again, you're trying to compare a technology to a protocol. Look, Ripple may end up working out for you, right? I don't know. It may. It's a technology, like you said. Is it Yahoo? Is it Google? Is it pets.com? I don't know, right? Like I'm not in the technology business, right? But I feel extremely comfortable with the store of value characteristics today of Bitcoin. Now, as far as transacting, remember, we are very early, okay? Like I think about when I was in San Francisco, I think it was 95 or 90, 95. I was trading Netscape on the floor of the Pacific Stock Exchange. I was an options trader, trading the options. Now, if you would have used Netscape in 1995, there was literally nothing on the World Wide Web. So you had this browser, but you had nothing to browse. It was extremely early, okay? Well, the layer 2 technologies, Lightning, federations, they're very early and they're coming. They're being used throughout the global South. They're being used in places where when you use Bitcoin as a medium of exchange, you use Bitcoin as a medium of exchange out of necessity. Not
Hold
out of
on, Dark Side.
desire. People desire a store of value. They don't desire a medium of exchange.
Hold on a second. I didn't ask you all the reasons why these improvements can't be made. Let me ask it again. If it were possible somehow to not give up the security of the network, and it could be faster, and the transaction cost could be lower, and the supply was decreasing instead of staying static, would that be a better Bitcoin if it were possible technologically?
No, and it is possible. That's what a layer 2 is. You should do some research on this, Scott. Layer 2s are absolutely dynamic technologies, right? They're early. They're not mature yet. They are being used. They do settle to the layer 1, right? But they are extremely cheap. They're much cheaper than US dollar rails. They're much faster.
Dark Horse, are the masses going to want to have to deal with layer 1s and layer 2s, or do they just want something that works?
It'll be, look, I can envision
You're
a
right,
world,
because none of them are using it for transactions.
No, they are. That's not true. It's not true.
A store of value.
That's just not true. Look, that's not true. You can speak to people in the global South that are living on a Bitcoin standard today. Okay, that's just fact. Go to Nigeria. They have 220 million people in Nigeria. I think over 70% are under the age of 35, right? And they are going to a Bitcoin standard and using layer 2s. Now, I can envision a world where you have a wallet on your phone, the same way we have credit cards on our iPhone today. You'll have a layer 2 wallet on your iPhone, and you'll click to purchase, and that will transact in layer 2 level, Lightning level Bitcoin. Now, is it going to be the Lightning Network? Is it going to be something new? I don't know, but you know what, Scott? It doesn't matter. Like, all of this stuff doesn't matter. The bottom line is study Gresham's law. For all the people watching out there, understand Gresham's law. Money is going to go to the heart. Wealth is going to go to the hardest money that exists. Also, another point, if you're looking at Scott's 4 points, remember, every money that exists on the planet Earth is a Ponzi scheme by those definitions. Every money, whether you're talking about the euro, the dollar, you want to talk about the yen, you want to talk about the Chinese renminbi. It doesn't matter what money you're talking about. By those 4 characteristics, they are all a Ponzi scheme. So look, why is all this money going into Bitcoin? Why are people harvesting dollars and euros and yen and trying to buy Bitcoin? It's because Bitcoin is the hardest, most secure money that mankind has ever seen, right? It's going to eat gold. It's going to eat the dollar. It's going to eat the yen and the euro and everything that's put in its path, right? Until it becomes the default hard currency of the world. That's where we're headed. That's what Saylor sees. And as proof, look at what Saylor is doing with MicroStrategy. How is he able to literally create and mine fiat money and turn it into Bitcoin at half the price you and I can buy Bitcoin? He's able to do that because pools of capital are trying to get into Bitcoin. It's not just a number go up theory. While number go up is part of it, it's maintain your number, right? In a world where dollars are being debased at an incredibly alarming rate, you have to find a way to maintain your number. If that means number go up, great. But if that means just numbers stay the same, you're still a huge winner versus holding on to fiat currencies. So look, if you're out there, I encourage you, do 100 hours, do 10 hours, watch some Saylor videos, read the Bitcoin standard. There are so many different things you can do to educate yourself. Don't take my word on it. Do your own homework. Put in the hours necessary to understand hard money. Why is Bitcoin better than gold? Come to your own conclusions. Thanks, Scott.
Okay.
Thanks, Crypto.
And my final statement, Mr. Moderator, and then if you have questions from the audience or whatever, or if we've run about the amount of time that you want to, again, Darkside, I deeply, deeply appreciate you willing to have this spirited debate. My desire, my strongest desire, Gary Cardone, Rat Jet on finance, and some of my XRP Army influencers, Mickle and Cryptoary. And Mickle, by the way, Dark Side, can answer those questions that you had about the validators and the nodes in excellent. He knows that stuff backwards and forwards. But the thing that I'm the most intrigued about by what you said is you didn't say, when you looked at this definition of a Ponzi scheme, which is legit, you didn't say that Bitcoin didn't fit it. You said, well, so does all the other money stuff. And so that, in my book, that's a win, right? And how I feel and the explanation of why at this and why at that doesn't really matter, right? So
we're going back to barter, Scott.
But again, I deeply appreciate the fact that you came, and our moderator.
Likewise, sir.
Yeah, if you have, and I mean, you've got. I want you to keep going. And if our moderator says that we've got any questions from the audience, I do want to make sure that we entertain any of those. I just know that if we keep talking and we keep going off in different directions, then it is a Ponzi scheme, and it is because the 4 elements that I presented that fit a Ponzi scheme, you said it fits it, but so do all of the other currencies.
No, look,
I'm not
I mean,
disputing,
by your definition,
I'm not disputing that.
All money is Ponzi schemes. I should go out and buy a cow and trade it for 100 goats, and then try to get my goats and try to get some hens, and then go from hens and get eggs, and then trade eggs for maybe an article of clothes. Look, in the end, we need money, right? So if you want to call all money, whether it's hard or fiat, a Ponzi scheme, well, that's your prerogative, right? Like if you want to go, you can live your life in a barter system. I'm going to choose to live my life with the hardest money that I can find, and that's
Dark
Bitcoin.
Side. I'm not disagreeing with you, but that we need something where we can move value faster than the Bitcoin Ponzi tech can do for us. It's too slow. It costs too much to be used by the masses for transactions. It just is.
Okay. Well, I think you should study the technology, but I appreciate your position. Look, it's left for the audience to decide, but I appreciate your position. I'm happy to take questions or happy to wrap. Crypto Parlor, you tell me what you want to do.
So I don't really see any additional questions here. There's a lot of comments, so you can read those later. But I think we could probably wrap it.
Well, I just want to say thank you to the Crypto Parlor. Thank you to Scott. Spirited debate. I really appreciate you guys inviting me up here. And
I appreciate all your time.
It was a good time. Thank you.
Thanks a lot.
Very much enjoyed it, gentlemen. Thank you. And I have an open invitation to any other Bitcoiner that would like to debate me. Let's do it.
All right. Thank you.
Good night, everyone.
Good night.